Smith, we've got some breaking inflation data out this morning. June CPI crossing now.
All right, Brad, I'm looking at these numbers right now. You've got the CPI print on a month-over-month basis actually declining by 0.1%, so better than expected there. You're looking at the core month-over-month figure coming in with a rise of 0.1%, which was slightly below what the street was looking for, so a further improvement there. Also further improvement on the prior reading. When you take a look at that headline number, CPI year-over-year coming in at 3% flat, that was better than the street had been forecasting. Also an improvement from the 3.3% reading the prior month. When it comes to that core CPI print at year-over-year number, that's coming in at 3.3%, which was also better than expected for the street of 3.4%. So again, we're looking at this reaction instantly here in the futures market. Not a huge move to the upside, maybe because a lot of this had already been priced in at this point. But again, this report here pointing to further progress in the Fed's fight to tame inflation here. And as a result, we're seeing some movement here in the futures market, although not a huge move at all.
Yeah, I'm taking a look at some of the indexes which increased in June. Shelter, motor vehicle insurance, household furnishing and operations, medical care, and personal care. All this considered, it looks like the decline and especially the index for gasoline falling 3.8% in June after declining 3.6% in May, more than offsetting the increase in shelter here. The energy index falling 2% over the month as it did the preceding month, and the index for food increased by about 0.2% in June. Some of the areas, though, where the indexes fell, and quite dramatically here, we're ultimately looking at the indexes for airline fares, used cars and trucks, and then communication among those that did decrease over the month here. And so that kind of getting us to this decline that we saw by 0.1% month over month, at least, with all items included there.
Yeah, exactly. And I think going into this print, especially following on the heels of some of the latest commentary that we've gotten from Fed Chair Jay Powell, pointing to the fact that he was confident in the fact that the inflation picture had been improving here over the last several months, confident in the fact that that would continue here in the coming months. So again, this print coming in better than expected, really showing that the disinflationary path is intact, and we're seeing a bit of a reaction here in the markets this morning.